Coming up on today's show, stocks snap their winning streak and fall across the board, why I think Jay Powell's pouring cold water on this market, various views on inflation, the latest treasury auction breaks bad, crypto rallies after BlackRock plans Ethereum ETF, the Saudis say oil demand is not weak, and Tesla falls sharply after an analyst downgrade. Hey, what's up guys? Welcome back to the Click Capital Daily Market Show. I'm your host Jared. I'm going to get you all up to date on the latest news, data and charts across financial markets. And we had a bit of a turn down today, with all sectors finishing lower. Thanks to hawkish comments by Jay Powell and a weak 30-year treasury auction, all of which I'll get into a bit later. We saw some sharp sell-offs in the healthcare sector, a few big falls in utilities. Home Depot came off 2.7% and Tesla finished the day down more than 5%. And just looking at the daily chart of the S&P 500, you can see we've actually bounced off this trend line I've had in place here for a while and stalled out right below 4,400 as I thought we would last week. And so the first 3 days of this week, we had really low volatility. The market was coiling up, and we got a bit of an uncoiling today on the downside, with every index finishing lower. Once again, led by the small stuff, with micro caps down 2.3% and the Russell 2000 finishing 1.55% lower. And stick with me because I'm going to come back to the charts later and perform some technical analysis for you and identify a few key themes and developments going on in the markets right now. I think you'll find that interesting. First, just a quick update on my stock pick I released yesterday. Just want to say a huge thank you to all you guys who purchased. I've got a lot of great feedback, and once again the response was overwhelming. And all of you guys too can see the opportunity I've found in the small micro cap stock I've invested in. And as you know, it just reported earnings today, beating estimates by 12%, did a bit better than what I thought, and the stock actually bucked the downtrend in the market and finished the day higher. However, I've also got a bunch of emails with questions from people, so I just want to quickly respond to those and then we'll keep moving forward with the daily market show. So the first is, why should I pay for this presentation? A lot of people saying, Jared, just send it to me for free. And I understand we all get in that expectation everything online and YouTube should be free. However, unfortunately, I'm not a charity, I'm running a business here. I did put in more than 30 hours of research and work to make my financial presentation, and it also includes ongoing updates from me, and it's really high quality research, and being a really small stock and the opportunity that it is, it didn't feel right just to briefly and casually mention on the channel to thousands of people that watch the videos every day. And I do spend about 3 hours or so every day to make this daily market show, and YouTube pays very little in their ad share. And in the spirit of full transparency, I'll actually show you what I made from YouTube last month. And don't get me wrong, YouTube is a great platform, I love it. However, as you can see here inside my YouTube channel analytics, for the month of October, my revenue from the ads was $193. And for those of you who know Queenstown, New Zealand, you know that barely covers a nice dinner out. And so in order for me to keep going and putting in all the effort for these daily market shows, I am going to occasionally promote my products and services with the goal of all helping you to become better traders and investors and sharing my experience as a professional investor. And so I do appreciate all of you that have purchased and help to support this channel and keep me motivated to keep on delivering the best financial content possible and putting in the hours of work every day in order to achieve that. So the second question is, can I purchase an OTC stock, over-the-counter stock? Because that's the stock the presentation's about, and I've just put 12% of my portfolio into. Well, the answer is yes. Most US brokers allow you to buy OTC stock. Some you have to enable the permission inside your account settings. I trade with Interactive Brokers, IB, and that's who I've purchased this stock through, so that's been no problem. The third question I got from someone, was I paid to promote this stock? As that's often a thing that occurs in the OTC market with penny stocks. To be clear, it's not a penny stock. It trades above $10 a share. It's profitable. They pay a quarterly dividend. And no, I was not paid by management or anybody else to promote this stock. I'm an independent trader and investor, and this is my honest research of a stock I found on my own accord. The next question was, do I need to be in America to purchase this presentation and stock? Again, no. Over half my audience is in America. The rest is in Canada, UK, Australia, Singapore, Germany, France, Italy, Spain, all around the world, and I myself are in New Zealand, so I easily bought this stock and I'm focused on the American market most of the time anyway. The fifth question was, what kind of updates do I get? So if you purchase this presentation, you're going to get an email from me every other month or so with periodic updates of what's going on with the company, the industry, and my investment in this stock, whether I do any future buys or sells, and when I do eventually exit it. So I will keep you updated on it. Next, some people wanted to know, do I get a discount on my next presentation? And the answer is yes. For members, whenever I release my next pick and presentation, you got a chance to purchase that a few days before the public and with a discount as well. So as a lot of you guys know, I look after my members and always try and do the right thing by you all. The last question is, do I accept PayPal instead of credit card? Again, yes. If you'd like to pay through PayPal, just please send me an email at support@clickcapital.io and I'll send you a link to pay with PayPal. And so just to quickly recap what I'm offering, it's a 45-minute special presentation video, includes a 27 slide deck and all my research material. I do a deep dive into everything about the business, the valuation. I present it all in an easy to understand format. It's a simple business. I only invest in things I can really easily understand. I'll let you know my investment objectives and investing plan. It's a one-time fee of $59 and you get instant access to the presentation. And like I said, that includes periodic updates from me on how everything's tracking with it. And to be honest, it's one of the best picks I've ever found in my investing career. Like I said, micro caps are down big, over 40%. There's a lot of bargains out there, and this one I found is a ripper. Like I said, it's profitable. They just reported earnings above estimates. They pay a quarterly dividend. The dividend yield's actually above 12%. They've got a really strong balance sheet with cash, almost no debt. Management's really qualified and competent. The CEO actually used to work for JP Morgan for 14 years and then was CEO of another company and successfully exited to BlackRock. He owns 2.5% of the stock. He's the 5th largest holder, and they recognize the shares are undervalued as well. That's why they're buying back stock, which is a strong tailwind for the stock price. And like I said, it's priced under $15. I think it's worth closer to $50, and I honestly think it could get there in the next 1 to 2 years. So if you're interested in finding out what stock that is and watching my 45-minute special presentation on it, then just head on over to my website, clickcapital.io/presentation. I'll put the link below this video in the description. Then just enter your email in this box and click buy now to safely check out via Stripe, one of the largest and safest online payment processors there is. Just enter your credit card details. I don't see that. And then make sure you keep this page open, as you'll be automatically redirected to the presentation and you can watch it straight away. And based on the feedback and orders I'm getting, a lot of you guys are finding a lot of value in that. So once again, thanks very much for everyone who's purchased already. And I'll definitely be doing another one of these probably in a couple of months when I find my next solid pick that I'm invested in myself. Okay, thanks for your patience with that. And now back into the daily market show. Still got a lot of people really bullish on the big tech stocks. They have actually been putting in some good technical patterns lately, breaking out, coming back up to yearly highs. And it's been such a persistent theme and consensus. We've even got Warren Buffett's number 2 man, Charlie Munger, saying investors need to own stocks like Apple and Alphabet or they risk being left behind. That's really powerful words from the 99-year-old investor. Says he likes the tech titans and regulators shouldn't break them up. He went on to say what everybody has learned is that everybody needs some significant participation in the 12 companies that do better than everybody else. You need 2 or 3 of them at least. And of course he's talking up his own book because Berkshire Hathaway has its biggest position in Apple. And so of course he doesn't want to see regulators go after anything like that. We've even got a lot of bears thrown in the towel and buying stocks. That's money manager Sebastian Page of T. Rowe Price said a surprisingly strong economy should lift stocks higher. Going on to say growth has been surprising on the upside significantly. And that's true. We saw third quarter GDP coming in at an annual clip of 4.9%. He also pointed to $6 trillion in money market funds, with it being $2 trillion more than the pandemic. A lot of people refer to that as a lot of dry powder that can go into stocks. However, the difference is this time is it's earning above 5%, something it hasn't done for 17 years. And up until today, we just come off one of the largest winning streaks for the stock market, up 8 days in a row. And just looking back over the last 95 years, an 8-day winning streak's only happened 63 times, a 9-day streak 31 times, all the way down to a 13-day streak, which has only happened once. So it's no surprise we've got a bit of a pullback today in the market after 8 consecutive days higher. But the bulls are arguing this is just a bit of a pullback and we should get back above that 4,400 level and keep going towards a healthy Santa Claus rally. However, stick with me because I'll dive into the technicals underneath the surface and give you my opinion on the likelihood of that happening. And so part of the optimism by bulls is inflation coming down, with one analyst saying it should hit the Fed's 2% target by April and keep falling, with ING saying falling oil, rent, and vehicle prices are set to drive a continued period of disinflation, and that the ongoing decline in inflation suggests that the Fed is done hiking interest rates. But we've got others like economist Mohamed El-Aran saying brace for a sharp inflation drop that still won't be enough to return the economy to normal. He said prices won't get back to the Fed's 2% target anytime soon, pointing to inflationary pressures emerging across the global economy and saying they're not going to go away. And that's a similar sentiment from the big kahuna himself, Jay Powell, who we heard from today, who came out really hawkish, even said the central bank will not hesitate to raise interest rates again if necessary. Going on to say, we know the ongoing progress towards our 2% goal is not assured. Inflation has given us a few head fakes. If it becomes appropriate to tighten policy further, we will not hesitate to do so. And so I thought that was pretty interesting. And that's Jay just walking the line again. He likes to alternate between a bit dovish, a bit hawkish, depending on where things are. And I think that sharp pullback in long-term rates over the last couple of weeks might have had something to do with his hawkish comments today, because in my opinion, he wants to see those yields stay higher and kind of do the job for him in tightening credit and the economy. And that kind of de-risks the situation from him, and him having to do the job of hiking interest rates and potentially have an egg on his face if he overcooks it and a recession is just around their corner. He'd rather let bond yields keep the cost of borrowing higher, and that way he can point to the federal government as the blame for that instead of the Federal Reserve. And again, that's why I think the more the stock market runs higher and risk assets, he's just going to keep pouring cold water on that, because if we get a big bullish run in risk, that will be inflationary, and he'll have to come out and do the bond market's job for it and lift rates again. So I think that keeps a strong lid on stocks, and again, some upward pressure in long-dated yields. We also got everyone's favourite billionaire and market maker, Ken Griffin of Sidell, saying he sees high inflation lasting for decades. With him going on to say the peace dividend is clearly at the end of the road, we are likely to see higher real rates and we're likely to see higher nominal rates, which he thinks is caused by structural changes that are pushing the world towards deglobalization, and saying that the US is spending on the government level like a drunken sailor, and that higher interest rates aren't something the government had counted on when it went on a spending spree. And I'd have to agree with him on that point. And the onshoring of manufacturing as well is inflationary, as the US and the West has largely imported deflation from China, coming from low labor costs and the price of goods that we import. We also got one investment manager warning that we're in the biggest debt bubble in history and predicts the Fed's efforts will end in disaster. That's Universe's Mart Spixnagel. He views treasuries as a hopeful haven that offers limited protection. He went on to say, we're in the biggest credit bubble in human history. I don't think that should be a controversial statement. And this shouldn't be so surprising to hear from this guy, as he's the boss of a black swan fund, which specializes in protection against extreme and unpredictable tail risks in the market. And he thinks treasuries are not a safe haven. They're very much a hopeful haven. He goes, they have their place. I think they're pretty cheap right now, frankly, so I don't want to trash them too much. But as a strategic risk mitigation strategy, they just don't address the non-linear nature of risk. And he does have a point. Because of the ballooning federal debt, huge amount of issuance going on from the Treasury. Once again, we're seeing soft action in the 30-year Treasury auction, with it going about as badly as it could today, indicating investors are reluctant to own long-dated government securities. With the yield coming in on the auction at 4.76%, that was a pretty strong 5 basis points, higher than the yield in the pre-auction. So what the Treasury was hoping to sell the bonds for, they had to sweeten the pot to get investors to buy it. And that's what caused a bit of a jump here today in the 30-year yield, up a huge 3.2%. Still a lot of volatility in the bond market and the 10-year as well. And just looking at a 15-minute chart, that was already trending up on the week auction. And then those hawkish comments from Jay Powell as well sent yields higher today. And just going to the S&P 500 15-minute, the same time, stocks sold off and accelerated into the close. And a bit of a jump up in the front as well after Jay spoke, with the 2-year back above 5%. And here we go again, Fed fund futures increasing the probability that the Fed may hike in January. Now almost a 1 in 4% chance of that happening, but they're still forecasting cuts come June next year, as the bond market still thinks we're going to get a recession come mid 2024. Just moving on from bonds to crypto, we got some good rallies in Bitcoin and Ethereum today after the world's largest asset manager, BlackRock, registered to create an Ethereum trust, a potential first step towards asking regulators to approve an exchange-traded fund tied to Ethereum, the second largest digital token. That also helped Bitcoin trade up to its highest level this year, now up over 130% over the past year. But we got JP Morgan dismantling the bullish argument for Bitcoin, calling the crypto rally overdone, even went as far to say the possible launch of a Bitcoin spot ETF in the US is unlikely to bring in fresh capital. And maybe they're right, because we did get a sharp rally in Bitcoin today, getting up just shy of 38,000 a coin, before having a bit of a sharp turnaround and pullback like we can see on the 15-minute chart here. And just going back to the daily, putting in a bit of a shooting star candlestick formation there, and potentially could be a reversal in the making. Just taking you out to a weekly chart on Bitcoin, that $35,000 level was a big resistance zone we've been watching for a while now, and we're still in a short medium term uptrend here. However, if we can't hold above this resistance zone for at least a few days or a week so we can turn that into support, then it may indeed turn back around. However, for now, we need a bit more confirmation on that, so we'll keep watching that every day as we normally do. Moving on to commodities, and we've seen a big pullback in the price of oil over the last couple of weeks on the back of concerns over demand destruction, people pulling back their purchasing of gas, and weak major economies like China and the Eurozone. But we had the Saudi energy minister come out today and say people are just pretending oil demand is weak. It's all a ploy. And that could be setting up for them to extend production cuts into 2024, which so far they've only promised to the end of the year. And so my hunch is they want the price of oil closer to $100 a barrel, maybe around $90 a barrel now. Because just looking at the daily price action, we're stalling out a little bit here at $75 a barrel. It's a bit of a support zone I've got in there now. And the Saudis are basically coming out and saying they don't like it here. So along with the Russians, I think they want it more closer around that $85, maybe towards $90 a barrel. as their sweet spot to maximize their profits, keep the squeeze on us Westerners, whilst not destructing demand too much and making alternative clean energies that much cheaper, relatively speaking. So again, I'll be looking for oil to find support around the $75 level, and we are a bit technically oversold here. Moving on to some individual big stock moves. Tesla was downgraded today and actually got a sell rating from HSBC, with them saying Elon Musk is both an asset and a risk. Their caution stems from the uncertainty around the timing and commercialization of Tesla's varied ideas. They see considerable potential in Tesla's prospects and ideas, but they think the timeline is likely to be longer than the market and valuation reflect. They said Tesla is more than just an auto company. EVs are the main driver of revenue and profits at the moment, but taking the company at its word, the future for Tesla is about robots, autonomous vehicles, energy storage, and supercomputers. And I agree, Tesla does have a bright future when you look out 10, 20 years, but anything can happen in the short term, the next year or two. And like I've been saying on the daily show for a little while now, I think the sentiment's turned on Tesla after their negative earnings report on the 18th of October, where they missed expectations and their margins came in a lot weaker than expected. And we can see after that sharp fall today, down 5.4% on above average volume, the market cap's still $667 billion, which if the market just does start looking at it as an EV company, that's still really expensive. And I'm a long-term holder of Tesla myself. I've committed to owning shares for the rest of my life, as I think they're the number one brand in clean energy and likely to remain that way in what is probably the biggest secular trend in my lifetime. Society's transition from fossil fuels to clean energy. It's already happening, it's an inevitable. However, I wouldn't be surprised if Tesla, along with a weak market, can get down to a market cap of even 150 billion again, which looking at a weekly chart of Tesla, that would mean going below $100 a share. And the stock price has already been going sideways for almost 3 years. We're at the same levels as late 2020. And so that wouldn't surprise me at all. However, those that have bet against Tesla have been famously burned before, so I wouldn't never short the stock. And I'd happily like to add to my long-term position below $100 a share again. I actually just recently trimmed my position in it, as I have been doing in large caps as a whole. So I think they're a bit expensive, and like you know, I've been adding more to smaller stocks, micro caps, who I think, relatively speaking, are really undervalued compared to the top end of the market. And just looking at the technical price action in Tesla, it's looking a bit heavy here to me. After that drop down after earnings, we weren't able to even get above that high of the day and potentially close the gap, and we look to be rolling over again. So I'd expect this to trade below $200 in the coming days and weeks. On a brighter note, we got Disney having its best day in 3 years after their earnings yesterday, and Bob Iger back at the helm could be turning things around here. Recent quarter earnings came in 14% above estimates. Revenue came in line. Market seemed to really like that, up 6.9% today. There's a look at the weekly chart. It's been a strong downtrend the last couple of years, but we may have put in a base and a bottom here and could be breaking out above this downtrend line. And according to my own custom stock fair value indicator, that had been a little undervalued recently. Currently got fair value at $97, which is still a bit higher than where we are today at $90 a share. And if he can get back to some good growth, clean up some non-performing assets on the balance sheet, no doubt my stock fair value indicator will keep rating it higher, and this could have the makings of a good turnaround story, as it is one of the strongest, most powerful brands in the world, with one of the largest libraries of content, characters, and diverse product ranges. Just moving on to economic data, really quiet week. Had jobless claims coming today, pretty much exactly in line as expected. The big thing that moved markets today was the speech from Jay Powell, coming out a bit hawkish, and that weak 30-year treasury auction, both of which got yields spiking higher and stocks selling off. And even though we had one of the best 8-day rallies in years, fear and greed index wasn't able to even get into the neutral zone. That's because we've still got a lot of weak breadth underneath the hood. And we did see a bit of a recent uptick in corporate insiders buying stock, not a huge amount. And data yesterday shows we got 102 sales versus 70 purchases. Okay, back into the charts, and stick with me to the end of this video. Give you my final thoughts on the S&P 500 and where I think we go from here. First, let's just look at all the other markets out there. International stock indices, again, pretty quiet week, not much happening out there. Bit mixed up and down across the board. Got a little bit of a pop in volatility today. The VIX back above 15, still pretty low there. An option deal is not demanding much of a premium above realized volatility either. And a bit of a continued turn down in breadth, 58% of stocks above the 20-day average, and the amount of stocks above their long-term average still in a bit of a downtrend here. And there we go once again, the amount of stocks making new lows, back to easily outpacing new highs, 54 to 36 on the NYSE, and again, a more stark difference on the NASDAQ, 114 stocks making new lows versus 31 new highs. That is not a bullish signal at all. Bit of a turn back down in high beta stocks versus low volatility stocks, and inflation expectations still holding up there. And with that rip in yields today, saw TLT turn back down 2.3% on really big volume. Was actually the biggest volume day all year. and we're only sitting just above our 50-day. A lot of people think the bond market has bottomed, but to be honest, I'm really not so sure here. A lot of different factors at play. I'm just kind of watching it day by day. Need a bit more technical confirmation to say that this is definitely a bottom. Bit of a sharp turn down in high yield bonds as well, and higher yields is supportive of a stronger dollar, which we saw now almost back at its 50-day. And look at that rip in Ethereum after plans of BlackRock to offer an Ethereum ETF. That traded a lot stronger than Bitcoin and still sitting at its highs as I speak, above $2,100, but I'm not so sure on Bitcoin. We are obviously still in a strong short-term uptrend, but that was a bit of a rejection this afternoon. Commodities as a whole still a little soft here, and gold as well continues its pullback from its big resistance zone. Like many assets, we just got a lot of overhead resistance that they're struggling to pierce through. Uranium still holding up, one of the best commodities. And over to stock sectors, every sector finished in the red, except for the defense contractors, which was pretty much flat. Worst performing sectors today were ARC, down 3.1%, clean energy down 3%, with the biggest losing sector, biotech, down 4%. Huge amount of volatility in this sector. And again, the yield sensitive sectors like REITs came off a bit, and there was no hiding out in the defensive sectors like staples and utilities as well. Mega cap tech was a little soft. NVDA and Meta were the only two to finish higher on the day. We've now got NVIDIA back at its big resistance zone as well, and it too rejected off it. And I've got a feeling it's going to stall out there as well. Same with Meta, got some overhead resistance. Those new IPOs recently, some of the biggest this year, food delivery service Instacart, just reported earnings a lot worse than expected, down 10% today. Same with British chip maker ARM. After their earnings finished the day down 5%. AMC keeps on diluting equity holders to hell, issuing another $350 million in stock in tandem with their earnings, finishing down 13% today. Previous meme leader Carvana this year rejected its 50-day, down 10%, and a few other sharp falls in the EV makers. We also got earnings out today from Topgolf Callaway brands. Even though they beat expectations, investors didn't like the outlook. Got smashed today, down 16.8%. We also got earnings out from the Las Vegas Sphere owner, Sphere Entertainment. They came in above expectations. Market like that, up 7.5%. And once again, those beaten down old economy stocks we've been watching continue to get hit hard. General Motors, Walgreens, Macy's, all finishing the day sharply lower. But once again, holding up a bit better is 3M and the telecoms and Verizon, with more messy price action from those vulnerable regional banks and still softness in the big guys as well. Okay, just looking at the S&P 500 on my institutional buying percentage indicator, that fell again today, down to 49%. Have to go below 45% to go bearish, which the last time we got the bearish reading was up here on the 5th of September. The market then fell off, done a few little bounces, and my S&P 500 oscillator still a little overbought here at 56.81. And what a beautiful technical pattern we got there today. Bouncing off my trend line almost down to the exact point, and I'll be looking for some follow through tomorrow, because again today was a little bit weak volume. Market kind of really quiet here this week, low volatility, not much economic news out, pretty much at the end of Q3 earnings season, and earnings did come in above trend. But like I said, Jay Powell's pouring cold water on stocks here. I think if stocks and risk assets were to go ripping, he would come out even more hawkish and probably throw another rate hike in all our faces, because he doesn't want to see inflation uptick again if all our portfolios are ripping higher and then we go out spending all that extra money. So I'll be looking for the market to make lower lows tomorrow. And we got the 50-day VWAP at 42.85. A close below that, I would say confirm we're back in this downtrend. Still got the Nasdaq a little bit higher. That broke out above its trend line on Tuesday. We turned a little bit here again today, but on weak volume. And there's the composite chart of the Mega Cap 8, kind of bouncing off its resistance zone as well. So I mean, there's still a lot of reason for the market to get excited. Santa Claus rally, inflation coming down, earnings good, oil pulling back. But keep an eye on the 10-year yield and up the front too on the 2-year. We get those yields climbing back up. That's going to be a strong headwind for stocks and risk assets. As Jay Powell and his team are quite determined to get inflation back down as their number one mandate. And in my opinion, they won't mind a bit of a stock market crash if that helps achieve their goals. And they'd rather the long-dated bond yields do their job for them. That takes the risk away from them being accused of overcooking the rate hikes. So that's all for today on the Daily Market Show. Thank you very much for watching and supporting this channel. Make sure you come back tomorrow for updates on what's going on. And if you'd like to find out and learn more about the microcap I just recently invested in myself, then head on over to my website, clickcapital.io/presentation, and get immediate access for $59. And like I said, I'll keep you updated on that investment going forward as well, as I think it's a huge opportunity and I'm looking for 100 to 200% gains over the next year or two, with a number of catalysts that could drive that. That's all for now. Thanks again, guys, and see you again tomorrow night. Cheers.